Okay, so good morning, everyone. We are Tuesday, January the 28th, 2025. Welcome to the Macro Snapshot. What I want to do today, guys, is just look a little bit at a few charts, specifically what I'm sort of looking at the moment, and obviously to just have a bit of a look at the fallout after the DeepSeek price activity. So let's start off just with the general equities. I want to start off with the VIX. Of course, the VIX spiked up a little bit, but as you can see, didn't remain too long above sort of 20. We're now trading at about 18 or so. So still a little bit of elevation. We'll see what sort of happens. Today, we don't have a huge amount of data. Actually, we'll just have a quick look at that. We have durable goods at 8:30. Let's have a look. And we have a conference board. So we have durable goods for December, the preliminary. That's always interesting, kind of a choppy number, though, sometimes. I don't think it's going to move the market enormously. I suppose what the market is expecting is just, sort of a robust economy to continue. A lot of the focus today, obviously, is going to be more on sort of earnings and, the fallout, as I said, from DeepSeek. Anyway, keep your eyes on the number for the core number, non-defense, excluding aircraft, expected to be 0.3. And then the other one, which might actually get even more attention, is the conference board consumer confidence and expectations sort of numbers coming out at 10 o'clock. But to be honest, I think, compared to what Trump's saying and what's it called? DeepSeek and NVIDIA, that's going to be of secondary interest. Talking about Trump, there was a headline last evening. Trump says he wants universal tariffs much bigger than 2.5%. There have been a few rumors going around that the newly confirmed, actually, Treasury Secretary Scott Bessent is pushing for 2.5% universal tariffs, so tariffs on all goods coming into the US, and then to ramp that up a month over month, so a gradual increase in tariffs. Trump, of course, has been vague, but said that he wants a bigger number. He always wants a bigger number. We shall see. So there's a little bit of sort of support for the US dollar on those headlines, things like the Canadian dollar and the oh, excuse me, it's very cold here. And the Mexican peso sort of came off a little bit, but that's not the main thing. Excuse me. I hope to not keep on sneezing, but it's -15 where I'm recording this. Okay, so let's have a look at the chart. I want to first of all just look at the ES. Now, of course, ES wasn't the one most affected. So let's see what happens now. So we see, because as the Nasdaq was, so we see here that if you look at the 50-day average, we're still trading above the 50-day exponential moving average, this line here. We had a pretty strong reversal, not a huge amount of action overnight, up 12 basis points on the futures as we speak. But really here, I think the question is going to be one of, is this something which is only for NVIDIA? This is like direct competition for NVIDIA. This is a problem for things like, if you look at the Global X ETF on data infrastructure and data centers, AI data centers, those kind of things took a hit. We can also look at uranium energy sources. They took a big hit yesterday. So is the market going to say, well, okay, this is more competition for NVIDIA, but actually for smaller companies and the general sort of real economy, is this actually sort of potentially good news that now what we're seeing is that the rollout of AI will not be as expensive as anticipated and will not require as much energy as anticipated. And even for some of the other big companies in the tech space, like Meta and Amazon and Google, is this actually sort of a cloud with the silver lining that they may not have to spend quite as much on sort of AI infrastructure and energy going forward? Their capex may be a little bit lower. And so could this be that this is going to be contained to NVIDIA and related sort of industries like infrastructure and data centers, and that the broad market will actually, in fact, welcome this sort of medium term? And we'll look at the equal weight in a second. But what I would say here, like if we just look on a 1 hour chart, what I want to do is just to say that what we need to know here, if it's going to be more of a sell-off, is pretty simply this: is it going to get above the fibs? I always like to look at that. So we're seeing here again on a 1 hour chart the S&P. So obviously it gapped down on Sunday night, kind of collapsed, hit the lows. At this point, I'd say it's 50-50 because if this can go above the 50, sorry, the Fibonacci zones, which is about 6,080 on the futures, you've got to say that this looks as though it's sort of pushing back and it's going to, the market has decided that it's going to be contained to NVIDIA. On the other hand, if it sort of stalls out here at the 50 EMA, for on terms of the hourly chart here and the 50% fib retracement, could this just be a reactive bounce, a little bit oversold, and we might have a bit more downside? That's going to be very, very, very interesting. The other thing to look out here, of course, is on the Nasdaq, which obviously has more direct exposure. Again, similar kind of situation here. It tested the lows yesterday. We're now trading around about the 50-day moving average. So technically, not an extraordinary amount of damage, but again, if I put it on a 1-hour chart and just look at this, that fib area here, you can see that the retracement has been weaker than the ES. You see the ES was trading above the 50-hour moving average here. So you can see here, if just looking at the fib retracement here on NASDAQ, that it's stalled out at the 50%, which is about 21,420, so 21,420 on the NASDAQ futures. And that's relatively bearish because we see here that it found it difficult to get above that level. It's going to be pretty critical, I'd say, the next, well, let's call it today's trading session, because if this rejects here, there's definitely more downside. So let's have a look at that. The other ones I want to have a look at here is, let's just go back to the daily. And again, what I'm trying to say here is that if the market decides that, again, this is more of a problem for NVIDIA, but not such a problem for the other tech behemoths and for the general economy, maybe that's a good thing. And what we did see yesterday was that the Russell, just compared there, actually, as you guys can see, did relatively well. And possibly what's even more interesting is the equal weight. So you see the equal weight yesterday actually had an up day. And if we're looking in the pre-market, well, it's trading where it closed, but basically the equal cap's doing pretty well. And I was looking at some stuff this morning, which I saw that the market breadth is actually pretty good. And if you look at the number of companies yesterday in the S&P 500, I think from memory, I think 300 yesterday, 300 out of 500 actually traded up on the day. So the point is that the sell-off yesterday, because of the huge weighting given to these things like NVIDIA, the market did sell off. But the reality is that on a stock-by-stock basis, the broader market and a lot of sectors actually did relatively well. Now, so this is the equal cap yesterday. You see they're up a little bit, up 7 basis points. But you look at the MAGs, which is an ETF which tracks the MAG 7. Obviously, that gap down, and it was a pretty nasty day. So that's kind of interesting to look at. And another way we could look at that is just to look at the sector performance yesterday. So I've got here just the SPX, kind of the wagon wheel here. And you see here that it was actually a pretty mixed day. Now, obviously, you can look at the worst performer, which was information technology, which was down 5.58%. I don't know if we can get even a bit more detail there. You can see that semiconductors was down almost 14%. So the point to note here is that overall, the information tech was down, about 5%. The semis took a brutal hit, about 14%. But even within this sort of tech, the broad technology sector, you can see that software and services only down 1.7, and hardware and equipment actually plus 73 basis points. So quite a lot of internal differences there. So it's important as well not to sort of necessarily just look at everything and say, oh, stocks are down, it's all horrible. I think we have to be a little bit more nuanced. And then you can see other things which went down. You see here the utilities and industrials are down quite a lot. And of course, that's because a lot of the utility companies, the large electric suppliers or suppliers of electricity for their sort of AI data centers. And the point here is that those guys took a hit on the idea there'd be less requirements for their services. Now, on the other hand, you can see that some of the defensive consumer staples actually up yesterday. Healthcare, financials doing pretty well. And it's kind of interesting to compare, let's say, the financial sector to the technology sector on a broad ETF sort of section here. So again, what we could do is just look at a couple of other things here. I just want to show you guys a couple of things. Let's see if I can find the S&P sectors, which I have here. Yeah, so if you look at the S&P sectors here, you can obviously look at the chart here. We had a big gap down on the technology. But for example, if you look at something like healthcare, you can see they had a big green day up. So a different outperformance. The other thing to look at here is also the industrials, as we saw yesterday. Nothing dramatic, but still down. And the energy sector down a little bit as well, so that they're actually having a bit of a tough time. Just finally, just to give you an example of the kind of things we could be looking at, if we look at, I think I've got, is it energy? I've got uranium. I just want to look at some of the uranium markets here. Oh, that's nat gas. Nat gas has been down a little bit because of the cold weather. Forecasts have gone away and slightly warmer weather, actually. Um, Actually, my uranium, sorry, I think it's in metals. There we go. Sorry, guys, got a lot of stuff up here. Okay, so if we look at some of the metals yesterday, we saw that copper had uh, some problems. Oh, this is frozen. Sorry, why is this frozen? Anyway, the point I wanted to make is that if you look at things like URA, which I'll put up here, which is the uranium ETF. So this is Global X Uranium ETF. You see that gap down nastily. So all of the uranium companies, the spot physical uranium, the URA, we can even look at a company like sort of Cameco, which I've looked at, the big Canadian uranium supplier. So if we look at Cameco, you can see here that also gapped down and had a pretty nasty day. So why is that? Why did uranium go down? I mean, basically one of the ideas was that because of the intensive amount of energy and electricity required by the AI infrastructure, this is what the market was thinking. The logic here was that the nuclear power would become more and more important, and therefore uranium. So what I'd say, it's going to be very interesting today to look at large players in the uranium space like Cameco, or maybe one of the ETFs like URA, just to see how the market kind of bounces back from that. The other thing, just finally, to look at I'm going to put this is the top six, the MAG 6, put it on a 15-minute chart. And what I want to show you guys is just really there was quite a lot of difference in performance yesterday. So if we look at the bottom left here, you see that NVIDIA gapped down and actually it couldn't do anything. I mean, overnight up a little bit from 118, the lows 121. But I think this is going to be difficult for NVIDIA to retest its highs, honestly. There's going to be a lot of skepticism now. And after the earnings coming out this week on Wednesday afternoon and Thursday afternoon with the big tech companies, there's going to be a lot of talk to the Metas of the world, to the Googles of the world, saying, hey, do you actually need to be spending so much money on CapEx, on AI? And I think, the big loser here is going to be NVIDIA. So, because as you can see here, Apple actually gapped up and had a pretty strong day's performance. Microsoft gapped down, but, is crawling its way back up. We see Meta actually had a very strong day, so it gapped down, you see here, but actually ended up sort of higher on the day, so doing pretty well. Alphabet, a weak one. So this is interesting. Is this a sense now that Alphabet, Google, search engines actually going to have a little bit more competition from some of these AI startups? So kind of an interesting one there, and Amazon. So the point is here that within those big, the MAG 7 or the MAG 6 here, there is quite a lot of divergence. So that's definitely something to be looking out for. Okay, so let's get on to a few other charts here. I want to go back now just to some of the basic stuff, some stuff I'm looking at. If we look at oil's at an interesting point here, and I'll put it here on the CL1 contract. So this is CL1 on a daily chart. And what I just want to show you guys here is this sort of a relatively asymmetric time to be buying? It's something I'm kind of looking at here, because if you look at the fib here, we can see that oil, you look at this impulse where it sort of started taking off from about the 9th of December, you can see that it made a high. It was a triple top on the March contract. You see here, it's easy to see. So this is the triple top here on the March contract, and it came down. Actually, we'll keep it on the March contract. What you guys can see here is that approximately where the 50-day moving average is, so you see this kind of purple line here, bounced off the 50-day moving average, which is also the 61.8% fib retracement at $72.37. Now we're having a little pop. And so just saying that oil, I think, is a balanced market at the moment. We had some headlines this morning of some supply disruptions in Libya. The point is, I'm not saying this is going up, but those of you who want to take a stab, you have a pretty good risk reward here. It's an asymmetrical moment to be looking at the oil market. We know that Trump wants the price lower. We know, in theory, he's spoken to the Saudi prince. But we also know that, for example, in the United States, none of the oil producers is particularly interested in drill, baby, drill, in overproducing to force down the prices. So I think oil, it's possible this will stabilize, and maybe just from a technical point of view, that's not a bad thing to be looking at. I have some Irish breakfast tea this morning. Okay, let's also look at the dollar. It was very interesting yesterday because the dollar let's see where the dollar's at. So if you look here, this is a daily chart on the dollar index. You can see here that if we look at the Fibonacci extension, the measured move was kind of done up there. So that makes sense. So you know that this sort of retraces and then extends with a Fibonacci calculation there. And that's come down. But what we can now see, I'll just get rid of that just to clean up the chart. But what we can now see is that we've had on this fib here, were basically supported at the 61.8% retracement here. So the question now is, should one be shorting? Is this going to continue weaker? It's interesting. I have a feeling that Powell will be neutral and possibly even, I'm not going to say dovish, but not hawkish tomorrow. So the question here is will this go down more? And although I think Powell may not be overly hawkish, I just find it very difficult to think of reasons to short the US dollar at this point. As you guys can see here, if we go back on a big trading range, I'll put it on a weekly on the US dollar, just to clean it up here on the dollar index. You can see that we had a very well-defined trading range between about 100.2 and up to about 107, let's call it, and a half on the dollar index. And the point is that it broke out. And normally when you have a powerful breakout out of a trading range like this, it's pretty normal to come back and test. But to actually go back now and sort of fade down weaker, I think it would be sort of unusual from a technical point of view. Of course, anything can happen. But I just think as long as we have uncertainty, as long as we have the US economy doing pretty well, and I know yesterday we had a wobble, but the reality is, as I say, if that's more sort of a NVIDIA problem rather than a general sort of US economy kind of problem or tech problem, the idea of US economy still doing quite well and even outperforming the rest of the world is still valid. So my personal feeling here is that maybe the US dollar could get a little bit of a bounce. But just keep an eye on that because I think that's quite an interesting level. And again, it's an asymmetric level to potentially be thinking about longs. But again, we're going to have to see a little bit what happens with Trump and tariffs. Trump talked, as I mentioned earlier, about sort of tariffs being maybe 2.5% minimum universal. We shall see. And that supported the US dollar. Okay, and of course we have the Bank of Canada tomorrow and also the ECB. And talking about the ECB, let's have a look at the euro. Similar kind of situation to the dollar index, of course. I'll just find it here. So if we have a look at that, what I want to show you guys, if we put on a weekly chart, just zoom out a little bit here, you can see here, it's at an interesting level because if we go all the way back and look at the fib going back from September 22, you guys can see here that it was in a trading range which it broke out of and came back to test the 61.8. So this level down here of 1.018, so 1.018, that actually was the 61.8% sort of fib level. And now it's bounced up a little bit. It's kind of retraced a little bit. But again, it's a similar kind of logic to what I was saying with the dollar index. You have to say that it too, the euro was in a very wide trading range of, let's say, 105 up to about 112, 113 for many, well, basically a year or so. This is the weekly chart. If we put it back now onto a daily, you can see here that it's coming up to a little bit of resistance. So we've got the 50-day moving average here, just starting to hit its head against that. And keep in mind that it's been below the 50-day moving average for quite a long time. So this is quite an important sort of level here. It's also getting back into that trading range. But if we sort of throw a fib here, like a reverse fib, we can see that it's also starting to hit. Actually, that's not particularly clear, so I'll just change the fib onto the red reversal one. So if we look at a couple of fib levels here, we can see that we're just hitting now the 38% fib retracement from this sort of most recent down impulse. So the point is, or if you want to sort of bring it back a bit on the fib, you could say that this level up here about 106 is important. But the thing is, I think the euro is starting to get up into quite a lot of resistance. If we have any kind of weak data out of Europe, if we have any sense of neutrality or dovishness from Lagarde on Thursday, and if we keep continuing to have a strong US economy, which we'll see again at 8:30 this morning, I think this could be a moment for the euro to find itself under a little bit more pressure. Talking about European currencies as well, I just want to have a look at the Swiss franc. So this is the USD versus the Swiss franc. kind of interesting moment here, and I'm a bit annoyed because it looks like I'm a little bit late. We had very, very dovish comments. We've had a barrage of dovish comments recently from the head of the Swiss National Bank, Schlegel, I believe, is the new governor. He was basically saying yesterday that he didn't love negative interest rates, but if that was the requirement, they would do it. He also said that inflation could go below zero. So very, very dovish. I think they're really trying to weaken, to talk down the Swiss franc because, of course, it's strengthened a little bit over the last couple of weeks, and they don't like that because that's sort of inflationary, and that is don't really like that. So, but what's interesting here is some very interesting level. You see that the US dollar has been very strong. US dollar hit a resistance here at about 92, has come back down. Nice fib retracement, 50% fib retracement from this most recent up impulse. So it bounced off the fib retracement at 0.8967, which you can see here, which also coincides with the 50-day EMA. It would not surprise me at all if just on, again, strong US dollar, tariffs, strong US economy, increasing deflation in Switzerland. If we first of all tested up towards the 92 level and maybe even completed some kind of Fibonacci extension measured move, maybe even a bit higher up to 93, 94, something like that, it's a possibility. So the Swiss franc to me looks to be under a little bit of pressure. The other thing I just want to look at finally, I just want to have a quick look at gold, which I will find. So I'll look on the futures, although it's always good to look on the spot price as well. But if you look at gold here, it's kind of pausing at high. So you see here, it's pretty normal. It paused at high. So really what we're trying to figure out here is this just a little kind of quick retracement for another, attempt at a new high? Or is this sort of a double top, the double top around about, let's call it about 2,800 on the futures. If we put it on a 4-hour chart, which we can do just to sort of break it down a little bit. It kind of already completed the measured move. So you can look, let's say, hold on, let me just get the measured move here from, something like, I don't know, where are we? Something like this. You can kind of see the measured move here. It was completed. So if you look at any one of these measured moves here, so this is pretty normal. The fact that it actually came off is my point. And again, on the 4-hour chart, hitting up against the 50 period. But I think the 2,700 level is pretty key, which is this level down here, because this is a fib level. And if we go actually back onto the daily, you can see that the 2,700 level, which is about the 50% fib retracement, by the time it gets down there, that'll also be coinciding sort of probably with the uptrend here, which you can see, which I'll just extend out a little bit. And also it's going to be coinciding with the 50-day EMA. So I think this 2,700 level is very, very interesting. If it comes back there, I think that could be a good buy. Just a good buying level, just because we know that a lot of central banks are increasing their gold holdings. Asset allocators are allocating a little bit more to gold. And of course, there's geopolitical risk. And if you're of the camp which believes that inflation is still a bit sticky, gold has proved to be an excellent diversifier. So that's going to be kind of interesting. On the other hand, if it goes through there, and we think this was a double top, I mean, who knows? Maybe it can come down here and retest the recent lows at about 2560-ish, something like here. Come back down there, then maybe sort of bounce up a little bit. And again, sort of falling failed rallies here, and actually be that 50-day exponential moving average could then become overhead resistance. So that's something there to be looking at. And by the way, that's a pretty similar looking chart to Bitcoin. If you look at something like Bitcoin here, very similar chart that you had. You had a Fibonacci retracement here, which came back to the 50%, hit the 50-day moving average. So that one's actually looking pretty good as well. So look at that. There's a 50% fib retracement on the 50-day EMA. So Bitcoin, again, same kind of thing. We want to know if it's a double top. Again, similar to the gold chart, this could either sort of now break higher, or what we want to see, if it proves to be a double top rather than just like a retrace to try and make new highs, similar to the gold chart. We want to see if it retests down about 90,500. Then what we might see, for example, I don't know, I'll put something up here. Let's say it comes down here, retests the low, and then, has a sort of a failed rally around about the 50-day moving average, and then could go a bit lower. So they're the two scenarios you want to be looking out for. Let's say BTC and gold, quite similar looking charts, interestingly enough. Just finally, guys, want to look at copper here, just from a technical perspective. Kind of interesting because copper on a daily chart here, you can see, whoops, you can see what happened there. It sort of broke out of the, oh, what's happened? My copper, oops. Sorry, let me just redo it. I think the computer's freaking out. Yeah, so you can see here, I'll try that again. So you can see here that on this sort of, it sort of had a basing formation around about $4 and then kind of broke out. And you go, okay, that's looking good, looking kind of bullish. But then if you go on a weekly chart, you can see here there's a very big, powerful downtrend kind of line. And basically it was rejected there. So you see it was rejected there around about 4.46 on the weekly chart on the downtrend. So really, again, what we're trying to figure out here is what's going on. Now, what I would say is that it's kind of in a Fibonacci double cross or crisscross, because on one hand here we have it's kind of bounced. It's at a very interesting fib level. So it's the 50% fib, which again coincides with the 50-day moving average, exponential moving average, which is around about 4.23. So ordinarily, you could say, well, if you're bullish, you could say that this is looking pretty good. This is a nice 50% fib retracement supported by the 50-day exponential moving average, and this could maybe retest at least this trend line, and then maybe break out and retest these highs. So that's possible. But on the other hand, you could also say we could do another fib, which I'll put the reversal on, and let's say from here. And you can see here that you could also make a bear argument and say, well, on a slightly longer time frame, yes, it did sort of retest, but basically at the 61.8% fib retracement, it's been rejected, which is kind of like a triple kind of top sort of situation, which also coincides with this downtrend, and now it's on the way down. So copper is an interesting one. I think it's at a very neutral moment. It's quite a good moment, I would say, to go long if that's your thesis. On the other hand, there's also a bit of a bear market here. And I would say that if you, again, just to go on, let's say, a weekly chart, one could make the argument, like from a Fibonacci extension level, that there's definitely more downside here. We could do this one, or we could do maybe this sort of fib extension. So whichever one you use, the shorter term or the longer term one, definitely there's a possibility for copper to retest the $4 mark and even maybe make new lows. So that's an interesting one. My personal view is that it's maybe a little bit too early to be going long copper. We want to see some clarity on the China situation, on Trump, and all that kind of stuff. We also saw last night that Trump said that he was going to put some tariffs definitely on aluminium and copper. So I think the jury's still out on the global growth story, especially as it pertains to China. Okay, guys, I'll leave it there. A little bit longer today, but I just wanted to look technically at a few charts and share with you what I'm sort of looking at. Obviously, today, keep your eyes on NVIDIA, the other Mag 7. We have a bit of data, Trump headlines, and just generally the way the tech space and the equities trade. It's going to be an interesting day. Thank you and take care.